Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, December 10th. Lots of action in these markets again, some of it good, some of it not so good for us bulls and the natural resources. The important thing to keep in mind here is that even when you have swings like you've seen this week in any market, rarely are the major intermediate term and longer term trends changed by such action. Let's go back a couple days and review. Last Friday we had a surprising unemployment figure come out showing unemployment ticked down from 10.2% to 10%, and that set off quite a few swings in the market. Traders started dumping gold, figuring, hey, what the heck, the economy's recovering, the financial crisis must be over. What do we need gold for? That was their short-term thinking. And as I indicated to you in my last video update, I would not be surprised to see a pullback in gold. That unemployment figure is what set it off, and let's take a look at the chart right now on gold. You can see the sell-off since last Friday, a sharp sell-off, sharp pullback, but if you look at the broader trend here, and this entire graph right here going back to July, you can see that it's just a pullback. Here are some of the trend channel lines I've had in for you over the last few months as I've been reporting to you on the gold market. It does indeed look like gold could pull back to about the 1100 area. That would be a normal, healthy pullback, and for long-term bulls in gold, and I have no doubt whatsoever gold is heading much, much higher, this would merely be a stepping stone, if you will, on the path higher, and it would be a great opportunity to buy and or add to positions. So I am watching this pullback in gold very closely. There has been no trend, no change in the trend for gold. Intermediate term or longer term, gold will be hitting at least, I think, at least $2,300 an ounce over the next couple of years, and probably much higher. The financial crisis has not passed. Some aspects of the financial crisis have been kicked down the road, if you will, by the Federal Reserve, but there are a series of unintended consequences that are going to arise over the next year and 2 years. And by no means is the financial crisis over. By no means is gold's function as a crisis hedge, an inflation hedge, and a hedge against paper fiat currencies. In no way has that passed or changed. This is merely a pullback in gold. Conversely to the action in the gold, we did see the US dollar, and I'm pulling that chart up for you now, start to rally. Here's the same chart I've been showing you over the past month or so in the dollar. Let me just bring it up a little bit higher for you to see more clearly. As you can see, last week this is where we were, and this entire time I kept telling you that if the dollar index just gradually declined within the confines of this triangle without falling out of bed underneath this lower line, that was an indication that while the downtrend in the dollar is very consistent and very strong and very enduring, this inability for the dollar to fall completely out of bed here indicated to me that a rally, a bounce in the dollar was overdue. And lo and behold, when the unemployment figure came out last Friday, a lot of shorts in the dollar started to cover their shorts. A lot of investors started to bet on the upside in the dollar, and you see this rally here. It looks like a powerful rally, but I don't think the dollar will be able to get above the 77.50 level up here, and it's going to run into resistance, and then it will start declining again. And of course, gold will likely at that point start to take off again to the upside. So over the next couple of weeks, we can expect to see some wild action both on the upside and the downside in these key critical markets, gold and the dollar, likewise in oil, likewise in other natural resources. Let's take a look at the Dow right now. Let me call that up for you. Here is the Dow. You can see it's starting to look a little toppy up here. That is largely because investors have been using the reflation trade, a weaker dollar, to buy stocks, buy gold, buy natural resources, buy tangible assets. And with the dollar strengthening in the last few days, they're beginning to, like in gold, start taking profits. I don't think you'll see the Dow fall much below 10,100, and then it will begin to resume a climb. I'm still reasonably confident that over the next 3 weeks we could see 10.8, even 11 or 11,665. Something will spark it. I don't see a massive plunge just yet. Excuse me, we could pull back a little bit further and then rally. Needless to say, it's probably going to be pretty volatile with an upward bias. Till next week, this is Larry. Have a good weekend.